Morning viewers and welcome to your midweek edition of the Economy and Politics Show, where we discuss developments around investments, the economy, policy and politics as it impacts the populace. Today we're looking again at our midweek segment on micro, small and medium enterprises, and we'll be discussing rethinking a sustainable model of interventions for MSMEs in Nigeria. With me to lead this conversation is Mr. Adeyinka Ogunnubi. He is the Group Treasury Manager at CFAO Group. Nice to have you on the show. Good morning. Yes, yeah. And so let's first begin with the fact that in about 6 decades, Nigeria will be clocking its 60th anniversary tomorrow. We've seen several interventions for micro, small and medium enterprises in terms of their development. But looking at this in successive governments and from your experience, has this really addressed the teething challenges of over 40 million MSMEs in the country?
Thank you. I think the simple, straightforward answer to that is no. And that is quite revealing, especially when you think about the fact that over many surveys that has been done by government agencies, private agencies, MPC, WC, SMEDAN, a lot of all these people, access to finance is the number one impediment that MSMEs usually talk about. So to reflect on the fact that over 6 decades of interventions, MSMEs are unable to access finance, it's quite revealing, especially when you look at the structure of the intervention, because off the top of my head, there are like 4 different levels of intervention, government intervention. So you talk about the one to the CBN, there are several ones, the MSME fund, and there's one for the creative industry as well. There's something for the agri sector. Yeah. There are several other interventions like that, and then you go to the BOI as well. BOI also has several layers of intervention. You look at the development banks themselves, and then you then look at the social intervention programs by the federal government. And to think about all that intervention that MSMEs still say that access to finance is their number one problem. So that just tells you that it hasn't worked. And we need to look at the underlying challenge of why it hasn't worked.
So, Mr. Adeyinka, you say access to finance still remains the challenge, and there have been vehicles, like you said, Development Bank of Nigeria, even trying to provide at favorable interest rates. Also, we've seen the Bank of Industry, like you mentioned. So is it, like some experts say, the time to have a now single comprehensive approach where we have to cut down on all the different layers of interventions, have a single approach and agree on what rates it can be provided to MSMEs?
Well, I think that can work. That's an option. But I think that before you even go to that, you have to resolve the underlying challenges. And the underlying challenges is, why are they unable to access? So it's to agree on why are they unable to access finance. And part of the challenge is, okay, so the CBN provides intervention funds, and the CBN is not a bank it's not a commercial bank, so basically it makes the funds available to commercial vehicles. Yeah. Commercial banks, Deposit Money Development Bank of Nigeria, and all sorts of things. POI.
Yeah.
So the problem is that the CBN makes the banks carry the risk of this lending. So they basically say, we're going to give you the money, lend to these guys, lend to them, but they must go through your credit approval policy, and you carry the risk. And once you say that to a commercial bank, the bank is going to ensure that they tick all the boxes in terms of what are all the requirements for that particular lending. And so they will look at the legality question in terms of the formalization of the business. They look at the business records and all that. And in a lot of the cases, the MSMEs fail in this, which is the reason why when you look at the amount of the percentage of credit lending to MSME in Nigeria today is less than 5%. In fact, in 2018, it was 1%. So we have to deal with formalization. Those are the underlying issues. So already currently you are beginning to see some kind of structure try to put everything together. But if we don't solve those underlying issues to make access easier, then we will not be able to. Consolidating under one would not necessarily solve the problem. It will just make it easier to solve it, but it's not necessarily solved.
Okay, Mr. Yinka, based on your expertise and even the various consultancies and exposures you've had, microfinance banking is one model that countries across the world have deployed to also help address the challenges of MSMEs. Do you also think that is it not time to maybe review their operations, because they are the ones that are viewed as being able to provide that access to finance even to the MSMEs, commercial banks, like you said, there are those terms, there are those rates and all that. Even they are still incentivized. The LDR, loan to deposit ratios, part of those things the central bank is trying to incentivize them to. But what about the microfinance banks?
Yeah, you're right. The whole ecosystem, or what you call the value chain for dissemination of funding. And in reality, they are a lot easier to access than commercial banks. But then, when you dig down into it, one of the major issues that they raise is interest rate.
Yeah.
Is the interest rate. So you have the rates are just, they're crazy. We are doing 5% per month. Who's going to be able to pay for that? So because of that, there's been a lot of conversation about because the rates are expensive because their source of funds is expensive. So you can't blame them.
Yeah.
So if there is that policy that enhances funding directly to them at a cheaper rate, then they can lend easier.
Okay.
So those are the ongoing conversations that I think needs to be expanded, and the CBN needs to look at its own. They need to look at their regulatory rules to allow for this level of intervention. So as long as the CBN is still directly intervening through deposit money banks as against microfinance banks, I'm not so sure that we'll have anything different. But I agree with you that the microfinance banks we've seen as a viable channel.
You've made a very strong point there, Mr. Yinka. You've said that the policy needs to enhance funding for MSMEs at a cheaper level. It's very important. We even have the Bank of Industry, which was also designed to support too. We also have the Development Bank of Nigeria, which is also to support. But before we move quickly to the next point, there's a school of thought that is saying that the micro businesses constitute a huge chunk of this value chain. Is it not important that we make a specialized provision for them, particularly the micro businesses? What is your thought towards that in terms of this whole provision? Because from what you're saying, those are the ones that will have those challenges, particularly in assessing funding and the interest rate terms.
You're talking about the
micro businesses.
The
micro level, yes.
Okay. Yes, you're right. Especially when you look at the statistics.
Yes.
The one that was done in 2013 and then the one that was done in 2018.
Yeah.
That basically says that over 99% of MSMEs in Nigeria are on the micro level. And when you look at what these guys are looking for, they are looking for businesses, they're looking for financing that is averagely less than 50,000 by statistics that we see. So, and the reality is that so there's a huge opportunity to be able to find funding, to fund that particular sector, especially when you look at how much they are contributing to the GDP, which we understand is close to 1% of GDP, and also belongs to the employment.
Yeah.
The challenge is policy. And you have seen that over the last few months, over the last few years, government has tried to directly fund them. But that model, while it is good politically, it's not necessarily a sustainable model, because it is not, a government can come in tomorrow and say, I don't want to do that, I want to do something. So it's not sustainable. So what you must have is an organic, generic system, microfinance, that is able to fund that particular sector and take them away from the informal to a formal setting. So it's almost like an incubation strategy. Take them from that level to a higher level and scale them. And I think that we have structures that we can leverage. Take the cooperative system for it. The cooperative systems, whether you call them the Osusu, is a well-developed system in this country.
Yeah.
That if we, yes, yeah. So if we develop them very, very well, because they are at grassroots level, and ensure that they also have sources and access to finance that can then be extended to the micro level, I think we will have a lot more. We will solve the problem a lot faster than we are currently. Trader money, market money, fantastic ideas work in the short term, but in the long term, we need a more sustaining solution.
All right. It's very clear. You've talked about the need for a clarity in policy that enhances funding for MSMEs at cheaper rates, and we should go for sustainability, not the short term. This whole short term approach is not going to work very well for the MSMEs. So we've taken note of those areas. But let's look at the fact that school of thought feel that what the private sector is doing, particularly in Nigeria, in terms of MSME intervention, is something that can be templated, and then government can just look at providing the enabling policy environment. So when you look at some initiatives like what the Tony Lumelu program is doing for African entrepreneurs, the Faith Foundation, and several other foundations are doing just to create that layer of support. Is that a model that can be embraced, and then government can say, we'll just provide enabling policy environments? Are there climes that have applied this that we can learn from?
Well, when you look at the Sustainable Development Goals, there is a particular goal. I was looking for. Okay, fine. I was looking for the breakdown. Now, goal number 8, I believe, talked about promote sustained, inclusive, and sustainable economic growth, full and productive employment, and decent work for all. Now, there's the target. There's the number 3 target there, which I noticed while I was just reading up. It said that talks about encourage the formalization of and growth of micro, small, and medium scale enterprises, including financial services. So already this is part of the sustainable SDGs, and we've seen models out of this country. I think there's one in India promoted by the EU around ICT.
Yeah.
So there are existing models that we can look at. Now, it's a bit of a challenge when you're trying to craft policy that basically brings in the private sector as the main carrier for MSME intervention. And it's something that is evolving. It's a conversation that is evolving all around. And we've seen models, in other parts of Africa and also. So the Tony Limedu experiment, I'll call it experiment, outside of across Africa, is interesting, and it's something that I think as well that we should look at to see how we can create policies that can make it work. But because already we are committed to doing that as a nation and as a government, create policies that ensure that. Do we have a clear picture of that yet? No. But I think that where we can look at models outside of this country and that we can borrow or maybe adapt what they are doing.
Yeah. Because even while you're looking at private sector, even the subnationals are also taking up some of these initiatives, entrepreneurship, like the Lagos State Employment Trust Fund. We saw what really happened, and it's still on. Even just recently, there was a partnership with the First Bank, Nigeria, looking at funding and support. We're also seeing some other states taking initiatives like that, Akwa Ibom, Ekiti, and even in the north, Kaduna State. So in these challenging times too, the COVID disruptions and all that, at state level, do you think state governments should look at interventions? From what you've said, at the federal level, we're still having a challenge of that policy enabler. What can states really do in terms of intervention? Should they go in head on in it, or create that policy and look at a PPP model to support micro, small, medium enterprises?
Yeah, you mentioned a good example with the Lagos State, Government Trust and I think it gives us a good roadmap of what is possible, because so far I will consider that project a success. And what we see there is a good model of public-private partnership to support MSMEs and reduce it. And there are loads of examples of private activities, private interventions. Dangote has one, which he deploys through BOI, I believe.
Yeah.
You have some financial institutions also doing something for women.
Yeah.
Access Bank as a womenpreneur kind of
initiative,
project. FCMB also has free loans for women. So there's a lot of private support going on. So I think that partnership can work. I think on the federal level, what the federal can do in terms of creating the enabling environment is to look at it from a position of law. So what can we look at existing laws, for instance, to help this out, to create this environment? I know that over the last 1 year now, we've seen increasing reforms in terms of law. There's the federal act.
Yeah.
There's the finance
bill
act as well. And also there's the CAMA.
CAMA.
and these are all legislation that have in them elements to improve on the to make it easier for MSMEs to access finance, to manage their taxes, and also to be better in terms of their formalization and also their incorporation. So my encouragement to the federal government will be to continue on this path. I think we're on the right trajectory. We just need to make it more, to make the strategy more focused, so that it's not all over the place.
Okay, more focused strategy. Just in a minute, what is your thought? I mean, I know you've discussed and had forum and several forums around the CAMA ACT 2020. Is it an act now, looking at it exhaustively, is it an act that can buffer growth for MSMEs, or would there be need for reviews? Experts are saying that we have to close the era of waiting so long to review legislations like that. Maybe a 6 years periodical review would be very good. But so far, this act, is it providing that buffer, that catalyst for MSME growth in the country?
Yes, it is, and I'll try and list some. I agree absolutely that there should be a minimum number of years for review. I think the last review of CAMA was 2004, and when you look at some of the provisions there in terms of numbers, you just realize that some of the numbers don't make sense again in 2020. So there has to be. I would look at a 5-year review. I think that makes a lot of sense, because there's a lot of development going on in terms of technology. So I agree absolutely with that. There are loads of provisions in CAMA. I think there are close to like about 900 or more of so clauses. So it's very easy to get lost in details and just concentrate on what things, which is what we've seen in the charity organizations and how they've reacted to one clause, the entire bill, the entire act. But concerning MSMEs, they've been, it's an addition to gains that was made by the federal government in the Federal Competition and Consumer Protection Act. I was trying to remember.
Yes.
And the Finance Act, as well. So they try to reduce the regulatory burden on MSME and eliminating administrative bottlenecks. I mean, for instance, you can now, as an MSME, register as a proprietor. Before you can register, you need yourself, director, all this kind of stuff. But now it's possible for one person to form and incorporate a private company.
Yeah.
It wasn't possible before. And so those are some of the legal restraints that have been removed. Also, in terms of restricting offers on share transfer, for instance, CAMA provides, the new CAMA provides that the company is prohibited from selling assets having value of more than 50% of the company shares without the consent of all its shareholders. If what it does is just to prevent the what you call the hostile takeover, of an MSME by someone who has
investment.
Greater capital. So you also have the threshold has also been increased in terms, of qualification to be a small company. In the old CAMA, the small company is one with a yearly turnover not exceeding 2 million and net assets not exceeding 1 million. That has been increased for annual turnover no more than 1 million right now. So there are kind of number of things. There's also the limited liability
LLC, yeah.
which is also before CAMA, you know, partnership did not enjoy limited liability status.
Yes.
You know, you know, so these are some of the things that I think
Highlights that makes it
are
much
in the new.
effective. Yeah.
But there are loads
What
of,
MSMEs.
of it really, but these are a few things that I think
I think those
to
are
lower the regulatory overhead.
definitely. I think reducing the regulatory burdens, removing administrative bottlenecks, the limited liability status for partnerships, and even leveraging on the gains from the FCCPC, that's Federal Consumer Competitiveness Protection provision, and of course the Finance Act is a good one, which we hope will continue. But as we wrap up, Mr. Adeyinka Ogunnubi, Nigeria marking 60 years in anniversary tomorrow, what would be a word to MSMEs this period? Because they are the key drivers of the economy. They're reeling through a disruptive pandemic. We're still at the receiving end of the impact of the falling crude oil price, the volatility, and funding may be a challenge. So much encumbrances in this period. How can they navigate this period? What's the word to them this period to really scale and sustain value and service?
Thank you, Lord. But my advice to them would be to find ways to formalize their business. You have protections under the law that will only help you improve. I mean, for instance, your business under the Finance Act, for instance, you can be tax exempt, for instance, if your turnover is less than 25 million in a year, you can be, or if it's between 25 to 100, you only have CIT of 20%. You can be VAT exempt as well. There are loads of protection for you right now within the law if you get formalized. Also, there are provisions for you if you are able to be accountable. You know, so things like low interest rates, single digit interventions. Look, the banks are willing to give out CBN intervention loans. They are willing to do so. They are very happy to do so. The challenge is that they are unable to do so because most MSMEs don't meet minimum criteria for credit approval. And some of these things are just basic. Just separate your personal business from your personal life from your business. Pay yourself a salary. As simple as that. Don't mix up your business with your personal life. Keep records. Keep accounting records. So when you do some of these basic things, you give yourself access to finance, and if you can get long-term financing at 5%, for instance, that's a lot of benefit. You can do a lot for you and for your business. But beyond COVID-19, we need to leverage more on technology. We need to leverage more on innovation and also find a way to ensure that we're able to reach a larger number of people from where we are than just holding a store. You know? So those are the things that I would say, judging from my own experience, MSMEs. They are resilient organizations, and I'm sure that they will survive COVID-19 as well. Thank you.
Thank you for time for a policy synergy that enhances funding for MSMEs at a very cheap rate, creating that enabler for them to access finance so that they can improve their operations. And the part of the MSMEs, they should work towards formalization. That will also help in terms of assessing the benefits of provisions for them. And hopefully, in subsequent editions when we have you, we will be able to see how they have improved and how we are beginning to gain traction for interventions. There's also a need to look at a PPP model, which I agree with you, public-private partnership, where we can really evaluate the impact of the interventions. And these are long-term, not short-term fits, because short-term fits don't really have that large impact. So thank you once again, Mr. Adeyinka Ogunnubi, Group Treasury Manager for CFAO Group, and we hope to have you in subsequent editions to speak around micro, small, and medium enterprise development in the country.
Thank you. Thanks for having me.
Yes. And that will be all for this edition of the Economy and Politics Show. We would continue this tomorrow as we mark a special edition of Nigeria's 60th anniversary. You don't want to miss it by 9 a.m., looking at the Nigerian political economy and its structure. Also, you can send your comments around micro, small, and medium enterprise development, a very important segment of our economy, contributing over 40% to our GDP, with over 40 million MSMEs operating across the country, with majority at micro level. What are those issues you would like to see addressed to improve MSMEs situation in the country? You can send your comments to news@prochange.com. We will receive them and respond appropriately. Join our website, www.prochange.com, to watch our videos, read our news reports and analysis. Don't forget, by 10 a.m., we have a market review where we discuss financial and capital market developments as it relates to economy. To come your way again, thank you for watching. Have a nice day and stay safe.